as usual, they don't. People are very complacent. Wall Street says it's all good and people believe it, but they shouldn't. I remember the Hirschstadt Bank collapse in 1974. That was a foreign exchange crisis. But through the early 80s with the Latin American debt crisis, and the late 80s with the S&L crisis, and then 1994, the Mexican tequila crisis with the collapse of the peso, 1998, long-term capital, .com, 2007, 2008, October 19th, 1987, the stock market fell 22% in one day. Not a year, but in one day. So I've been on the front lines of all those. But the one thing I've noticed is that each crisis gets bigger than the one before. And each bailout is bigger than the one before. And the question I'm asking as an analyst is, are we at the point where the crises are so big, it's bigger than the Fed? In other words, we're not really talking about bailing out a bank or a sector. People lose confidence in the dollar itself. And we do seem to be heading in that direction. You can think of the dollar and gold as kind of two sides of the seesaw. One's up and the other one's down, and then vice versa. When people talk about the price of gold, it's really the dollar price of gold. You can think of gold by weight. So, a strong dollar usually means a lower dollar price for gold, and a weaker dollar means a higher dollar price for gold. And we've seen that dynamic play out in recent months. It's not the only driver of gold. It's one of them. There's a good old-fashioned supply and demand. Sometimes you see in a financial panic, gold and the dollar will both get stronger. The dollar will get stronger against other currencies, and gold will get stronger measured in dollar terms because there's a flight to quality. Get me out of, yen or yuan or rubles or euros or whatever else it might be. Get me into treasury securities. And the thing about a flight to quality, it plays out in security space. What you want to get are really treasury securities. You want to get really short-term treasury bills and treasury notes. But to do that, you need dollars. If you're a foreign banker or foreign investor and you want to buy some 4-week treasury bills, you got to get dollars to pay for them. So the rush into save treasury securities creates a demand for dollars. And then at the same time, gold is another saving. So sometimes it's the seesaw. Sometimes they can both go up at once. I guess what I'm really saying is that I see gold getting stronger. The dollar is very much in the news. It's one of the questions I get most frequently. You talk about Ukraine or China or inflation, all that, but usually it comes back pretty quickly to the dollar. But I find there's a lot of confusion on the topic. The people don't distinguish between the role of the dollar as a payment currency and the role of the dollar as a reserve currency. And those are two very different things. There's some linkages, but a payment currency, basically, if I want to buy goods and services from you, and I tender some form of currency and you're willing to accept it, and you're confident someone else will accept it from you, that's a good payment currency. It could be dollars, it could be euros or yuan, or it could be Russian rubles or Brazilian reais or anything, as long as people are willing to accept it, have confidence in it. And, when we were kids, we'd use baseball cards and bottle caps. So almost anything can be a reserve currency. You need payment channels, and there's a little more to it than that, but that's basically it. A reserve currency is a very different thing. First of all, we don't really have reserve currencies. You go to the People's Bank of China, they don't have $100 bills stacked up in the basement. What they own are U.S. Treasury securities, which are digital, by the way. The last paper Treasury security was issued, I think, around 1979. So what they have are actually securities. So when people say reserve currency, what they really mean is securities that hold your reserves denominated in a currency. So, of course, Treasury securities are denominated in dollars, but they don't have actual dollars, in a bank account or in physical form. They own securities. Now, as far as the payment currency is concerned, that's relatively easy to displace. This is what all the news is about. So Saudi Arabia is talking to China about accepting yuan in exchange for Saudi oil. Brazil and China just negotiated a major agreement where the Brazilians could pay in reais for Chinese exports, manufactured products, semiconductors. The Chinese can pay in yuan for Brazilian, sugarcane, soybeans, aircraft, Embraer, and oil and other products from Brazil. The BRICS, that's Brazil, Russia, India, China, South Africa, about a third, we're close to half the population of the world when you throw in India and China in the same group. They've now rebranded themselves as BRICS Plus. So when they have their meetings, they're inviting Iran, Turkey, Argentina, and a lot of large countries, important countries that were not part of the original BRICS. They're working on a new payment currency, and that we're likely to see a big rollout of that. Don't know exactly what it'll be. They're working behind the scenes. It could be commodity backed. It could be gold backed. I'm not predicting that, but that's certainly one of the possibilities that we need to look at. But again, these are payment currencies. Now, When you get over to reserve currencies, it's much stickier. It's much harder to displace the dollar as reserve currency because it's not really about the currency. As I mentioned, it's about the securities market. Who has a securities market that's big enough, liquid enough? I mean, you need all maturities of securities from 4 weeks to 30 years, 10-year notes, 5-year notes, 2-year notes. You need primary dealers. You need an underwriting group, which is what the primary dealers are. They also make markets. You need settlement, clearance, distribution, custodians. You need hedging devices, when issue trading, repos, futures, options, et cetera. You need that whole network. We've been building it for 230 years since Alexander Hamilton. No one else has it or anything really close to it. Maybe the Germans and the Italians, but they're not really big enough. And above all, you need the rule of law. I mean, nobody trusts the Chinese. Nobody trusts the Russians with their money. And they don't even have large sovereign bond markets anyway. So the dollar kind of wins the reserve currency, meaning...
Thank you for watching this insightful discussion with Jim Rickards. As he highlighted, the global financial landscape is far more complex than it appears at first glance. The dominoes of economic crises never fall all at once. They fall sequentially, often with time gaps that lead many to believe the storm has passed. However, as Jim explained, it's crucial to look behind the curtain of the international monetary system to understand the underlying issues. We are in an era of tight money and high interest rates, reminiscent of past financial crises but with unique modern twists. Bank management's failures in risk management, coupled with the Fed's ongoing efforts to control inflation, indicate that the economic turmoil is far from over. The rapidity with which funds can be moved today means that bank runs can happen almost instantaneously, exacerbating the situation. Jim's experience with past financial crises shows that each successive crisis tends to be larger and more complex than the last, raising the question of whether we're approaching a crisis that is too large for traditional measures to contain. The potential erosion of confidence in the dollar as a payment and reserve currency, and the possibility of gold emerging as a more stable alternative, are critical issues to watch.